Hey everyone, for this lesson, we will be going over the trading plan. More specifically, how to trade with the trading plan. We will be going over 10 different scenarios, all using nothing but the trading plan. Keep in mind, all these trading plans were posted the morning of these days, and you will have access to them every single day. Another thing to keep in mind is that these are being used on the SPX charts. With that being said, let's go into the first scenario. So here it is. Here is the first scenario. First things first, let's read the trading plan. So we see we have a bullish bias. And if it's a bull market, if we stay above 5590 with good strength on the DDF calls, let's look for opportunities to enter long towards 5600, which is the first target. If we break this level with good strength, we will look for opportunities to enter long until 5610. Okay, so if it's a bullish market, we now know what to look for. If it's a bearish market, let's see, if we break and stay below 5585 with strength on the DDF puts, we will look for opportunities to enter short until 5575 and then 5550. Okay, sounds good. That's the trading plan. Let's see what the market actually did. So the first couple of minutes around this, you can basically not pay so much attention to because the market is still deciding on what to do. Now, after a couple minutes, you can see that there's a first break here on the 5590. Now, according to the trading plan, you buy. So let's say you buy right around here, right on top. You buy, hold, and you place your break even. In the first couple of minutes of the day, right before 10:30, you would have made around 7 points right here, which would have been right here. That's around 7 points on the first trade of the day with no heat whatsoever. Now, whether you exit here or not really constitutes to your strategy. But let's say you do. Let's say you exit and you already have 7 points on the day. Right after that, you can see that it starts going down, goes down, and it hits the 590 again. This is the part where it gets tricky because what exactly constitutes a break? Again, that's really up to your strategy. However, for this lesson, we'll use the first candle right above. So you can see this little red candle right here, right above. Let's say this is your starting point because it's the first candle above. All right, so you buy here, you buy and hold. And the market's winding and it goes down and it goes all the way to 3.5 points down from 590. So let's say it's around 3.75 points down from yours. Now, do you stop here? According to the trading plan, you don't. Now, why is that? Well, remember the trading plan said if we break and stay below the 585, did it even come close to breaking the 585? No, it only hit 5586. So you don't stop. You do not take the stop loss at this moment. So what happens right after? The market goes up and up and up. Now, it's up to you and your strategies if you choose to exit at the first target or the second target. Now, if you just bought, hold, placed your break even after that, you would have made all of these points because this was the lowest point of the entire day. And from this graph right here, just where you can see it reached 5637. That's almost 50 points you could have made on the day if you just followed the trading plan. And that's what the trading plan does. It gives you the plan for the day and you just follow the plan. And if you use the DDF charts and our other indicators, you can actually know when it's about a break or when it's going to stay above or below. So that's another reason to use the trading plan plus our other indicators. Let's move on. Okay, so here on the next day, we have another trading plan. So let's go ahead and read. There's a slight bullish bias, okay? And if it's a bull market, let's see. If we break and stay above 5640 with good strength, we will look for opportunities to enter long towards 5650. If we break this level, then we'll look for opportunities to enter long at 5670 and 5680. Okay, sounds good. If it's a bear market, let's see. If we have a failed breakout on 5640/5645 and stay below 5630 with the strengths, we'll look for opportunities to enter short until 5620. Perfect. Sounds good. So the trading plan is telling us that if the market stays above 56.40, then we can look towards 56.50 and then 70 and 80. If it fails to break out on the 56.40, then we can look for our first target being 56.20. All right, so let's see what actually happened during the market. Here, in the beginning of the day, we don't do anything. And why don't we do anything until this later part of the day? Well, the price hasn't reached where our first catalyst would be. So our first catalyst would either be breaking and staying above 56.40 or failing to break out on 56.40. So that's why we're not doing anything here. So let's see what happens. So we go up, and then we hit 56.40. Now, again, remember on the last one, I told you the first one for this lessons, the first ones will be taking as a breakout. So here you buy, you place your stop, your break even, and let's say you exit around here on your break even. So you didn't lose any money. Now, after this first right here, huge candle, you should have entered in a reverse. You should have shorted it. Now, why should you have shorted it? Because remember, the bear market says if we fail to break out, we're going to go short until 56.20. That's basically what it's telling us. And remember, if it's a fail breakout, that means the market is not going to go up towards that level anymore. So you can comfortably short the market. So let's say you short around here, which is around 56.36, all the way down to 56.30, and it goes all the way down right here to 56.12. But let's say you stop at the first target at 56.20. That's 16 SPX points in your pocket. 16 SPX points very, very easily, might I add, in around a couple of minutes. That's around 6-7 minutes of market time. You've already made 16 SPX points. That's more than enough. Now, notice how the trading plan actually doesn't mention anything past this level. That's because around that time, after we've had a huge movement and a failed breakout, plus remember, we still have a catalyst up here at 11:30 where the FONC member is going to speak. It's better to stop trading around this time in order to protect your profits, to make sure you actually have profits. Our day has ended with 16 SPX points, which might I add is quite a lot for 6 to 7 minutes of work. Let's move on to our next one. Okay, so another scenario, let's read it. Light bullish bias, okay. We have some catalysts. Let's see what happens if it's a bullish market. If we break and stay above 5595, we'll look for opportunities to enter long towards 5600. If we break this level, we'll look to enter long at 5615 and 5620. Okay, so if it stays above 5595, then we're going to go and look until our final target being 5620. Sounds good. The bearish side is if we have a failed breakout at 5595 or 5600 and we stay below 5585, then we'll look for opportunities to enter short until 5575. And if we break this level, we'll look for opportunities to enter short until 5560. All right, sounds good. So if we have a failed breakout again, then we will look for shorts until basically 5560. Sounds good. Let's see what actually happened during the market. So again, first few minutes, you can basically kind of put off to the side, and we have our first breakout here. So you buy right here at 5595. It goes up, goes down, maybe stops you, maybe it doesn't. Let's say it does stop you and you have to wait. All right, cool. Or you enter back, or it doesn't really matter. It gets down to this point right here. Now, do you stop at this point or do you let it keep going? Again, really up to your strategy. But for me, I wouldn't stop. I would just hold out because we haven't gone actually past 5595. We don't have a candle down here. We haven't really broken it. So we keep going. Let's say we buy at exactly 5595. We go straight up 56 right here. That's 5 points right here. You can see 5,600. That's 5 points straight. let's say you put your break even right there and you say, all right, it's either 5 points or I get until our last target, and you see it going all the way up right here. At this point, 56.12. Okay, we're not exactly at 56.15 yet, so we'll keep going. And it keeps going and it keeps going and it keeps going. Now, you could have ended at 56.20, which is 25 total points on the SPX, which is an insane amount to have. That's insanely good. Or you could have kept going all the way until whenever you wanted. But let's say you ended with 25 SPX points just because of the trading plan. That's amazing. And that's what the trading plan can do. It's going to give you the most important levels of each and every single day for you to be able to maximize your profits. Again, you can build strategies upon this, but the trading plan itself is super solid. And when you combine it with the actual DDF indicators and all of the other indicators that we have, you won't even need to stop. Or you might even realize and see when it's going to be a breakout or a failed breakout. And that's another reason why the trading plan is so, so crucial to trading. Let's move on to our next scenario. Okay, so another scenario, this time with a graph that's a little bit more sideways than the other graphs, but still the trading plan does do its work. Let's go through it. Right here, we have a neutral and sideways bias. We have some catalysts, and let's see what happens if it's a bull or a bear market. If it's a bullish market, if we break and stay above 56.40 with good strength, we'll look for opportunities to enter longer towards 56.50, and then we'll look for longs until 56.60. All right, sounds good. If it's a bearish market, let's see. If we have a failed breakout on 56.40 and stay below 56.30, then we'll look for opportunities to enter short until 56.20. And if we break this level, we'll look for opportunities until 56.10. Sounds great. We now have a clear action of what to do. However, what's not clear is what should you do during a consolidation. Now, if you look at this consolidation right here, you can see it's around 7.5, 8 points. That's a relatively small consolidation in the grand scheme of things. But to us traders, it seems pretty big. 7 to 8 points is a lot of points to be negative. But that's okay as long as you trust in the trading plan and use our indicators to actually help you. So let's go through it. First couple of minutes, okay, not really a breakout, not really seeing anything, and then you have this breakout right here. Boom. If you exit around this point, that's already around 7 points. If you exited around here, which most of us really wouldn't, we would have exited around here, that's around 6 points. Sounds good. You either have 6 points or you have 0 because you let it come back and hit your stop loss. Or should I say your break even. Sounds good. And then it comes all the way down here. Not exactly a break, not exactly a break. Right here, your first break. Now, what happens if it breaks 56.40? If we break and stay above 56.40, we'll look for opportunities towards 56.50. If you bought it right here, just placed your break even and let it go, you would have had around 56 to around, I'd say 56.67. That's a lot. That's 27 points right here to the top. But if you let it happen all the way until our first target right around here, I would say right here, that's 10 points of the SPX you would have made just following the trading plan. You would have completely avoided this consolidation right here. Even with the little bit you might have lost due to slippage or commission or fees, you would have made back right here basically instantly because it never even went lower than that at any point afterwards. It went straight up to 56.50. Again, the trading plan works wonders. Now, you might be asking yourself, well, why didn't we take a short trade around here at this point? Because remember, we haven't failed the breakout and stayed below 56.30. It hadn't even gotten close to breaking 56.30. So that's one of the reasons why we didn't enter a short trade around this point right here. Even though it was a failed breakout, you didn't lose money on this. Now, if you did want to enter this failed breakout, you actually could have made a decent amount right here and just stopped, or around this area right here when it started to go right back up. So you really could have made money both ways. Another great reason why the trading plan works. Let's move on. Okay, so on this graph, you can see a little bit more of a consolidation happening. Let's go through the daily trading plan. So we have a slight bullish bias, and what happens if it's a bull market? I'm going to read this out loud, go through it step by step because it's very complicated, especially the wording if you haven't ever read a trading plan before. If we have a failed breakout on the 5640 and the price comes back and stays above 56.45, we might be looking for opportunities to enter long until 56.60. Okay, what does that mean? So if the price doesn't break through 56.40, if it doesn't go through this line right here, then if it comes back up and stays above 56.45, which is this line right here, so if it doesn't break through this line, comes back up and stays above it, then we should look for opportunities to buy until 56.60. Sounds good. However, there's another caveat. If the price does not go down and breaks the 56.50 and stays above the 56.50 with good strength, we will look for opportunities to enter long towards 56.60. And if we break that level, then we'll look for opportunities to enter long until 56.70. Basically, what's that saying is that if it already starts out and it breaks this 56.50 and it stays above this 56.50, then we should look for opportunities towards the 56.600, 56.60, and then the 56.70. All right, sounds good. However, if it's a bear market, let's see what we do. Bear, if we have a failed breakout on 56.50 and stay below 56.40, then we will look for opportunities to enter short until 56.25. And if we break that level, we'll look to enter short until 56.00. Okay, so if it doesn't break through 56.50, so if it goes up and it doesn't quite break this level right here, and it goes all the way down and it stays below this level right here, which is a 10-point difference. If it stays below this level, if it starts trading around here, then we should look to enter short at until 56.25. And if it breaks that level with strength, then we'll look to go to 5,600. Okay, simple enough. Let's see what actually happened during the day. You can see the market actually opened around 56.48 and it goes up. It goes up and it stays, and it relatively stays above 56.50. You can see that it's this line right here. It stays above 56.50. If you bought right here, then you probably would have either broken even or stopped a little bit. And why is that? Because of this huge consolidation right here. This is a pretty big consolidation for day traders, right? So let's say you broke even or you stop with a little bit of points. Let's say you stopped with, that's around 3 points, right? Let's say you stop with 2 points and it goes down. Now you might be thinking, whoa, this is looking like the bear market because it failed to break out at 56.50 and it's going down. But what happens next? It doesn't stay below 56.40. In fact, there's no candle below 56.40. You can see right here, there's no candle below it. So we have to see what happens next to the market. It goes up and it breaks through and it stays above this 56.45. So now it's back to the bullish market and it's actually the first scenario that we read. So what do? We buy at this level and we hold up until 56.60. And what happens? It goes all the way to 56.60 right here. Boom. You just made 15 points, around 15 points on the day. Even if you did take a small stop around this consolidation here, you made it all back. You've made minimum 10 points on the day, which is still amazing just following the trading plan. If you were using other indicators, you might be able to tell that this is a consolidation, and that you wouldn't even have entered. And that's why I love the trading plan. It's almost like magic, but it's not. And it also helps you make money, which is my favorite type of magic. So let's move on to our next scenario. So next scenario we have, let's see what the trading plan has for us. So we have a slight bearish bias. Sounds good. What happens if it's a bull market? Well, if there's a failed breakout on the 56.05 and the 56.00 and the price comes back and stays above 56.10, we might be looking for opportunities to enter long until 56.30. So again, what that means is if it doesn't break through the 56.05, so if it comes here and it fails to break out at this point right here and it comes up and it stays above this line right here, if it stays above this white line right here and it trades up, then we can look to enter long until 56.30. Now, if the price does not go down and it breaks the 56.20 and stays above, we will look for opportunities towards the 56.30. And if we break that level, then we'll look until 56.50. So again, if the price simply just goes up and it stays up, if it stays above this line right here, actually 56.20, if it stays above this line right here, then we'll look for 56.30 and then 56.50. Sounds good. If it's a bear market, then if you have a failed breakout on 56.20, which means if it fails to break out and it goes down, just like it's happening here, and it stays below the 56.10. So if it breaks, stays below this 56.10 right here, so 10 points, it has to break and stay below a 10-point difference, then we'll look for opportunities to enter short until 56.00. And if we break that target, then we'll look for opportunities towards 56.50. Now, I can say this right here was a typo. It was supposed to be 55.95, but that's okay. We'll just disregard this for now. We'll just stick with the first target. So let's see what happened during the day. The day opens and we stay above 56.10. We haven't had a failed breakout yet, though. It goes and it hits the 56.20. This is when it breaks out. Now, you could obviously sell at the failed breakout like a lot of our users do, but let's say you wait and actually follow the trading plan. It goes down and it starts staying below the 56.10. This is when you sell. So you enter short and it goes all the way down to around, that's around 55.96, around that point. But let's say you stick with the target and you only sell until 56.00, which is right here. You still made 10 points on the day just following the trading plan. 10 points of SPX is a lot of points to be making every single day. And keep in mind, all of these trading plans are back-to-back days. And so far, they have been right. These trading plans are available to you every single morning before you trade. You should take advantage of them because they work and they work very, very well. They use the most important K levels and market maker positions to actually give you the trading plan, and it's perfectly crafted each day. With that being said, and another 10 points on the resume, let's go on to our next scenario. So going on to here, before I even start with the trading plan, I will have to mention that a lot of these days are not going to be as clear as some of the days that we've had. They're going to be like this where you're not really certain when to enter, when to take a trade. And that's when you use all of our other indicators to really make sure and to confirm that you're going to trade in the right direction towards the target. So with that being said, let's go into the trading plan. Market opens up with a neutral bias. And what happens if it's a bull market? Well, let's go through it. If we have a failed breakout on the 55.40 or 55.45 and the price comes back and stays above 55.60, we might be looking for opportunities to enter long until 55.80. So if the price comes, doesn't break through this line right here, if it doesn't go past this line, goes right back up, stays above this second line right here, if it stays above this line here, then we would look to trade towards 56.80. And if the price doesn't go down, if the price does not go down, breaks the 55.60 and stays above, then we'll look for opportunities towards 55.80. And if we break that, we'll look towards 56.00. So if it just stays above this line the entire time, we'll look for 55.80 or 56.00. Okay, what to do if it's a bear market? If we have a failed breakout on 55.60, which means, again, if we don't pass this line here, if it goes up and it comes right back down and it stays below the 55.40, which is this line here, so goes up, comes right back down, stays below this line here, just like what you see is happening. Then we'll look for opportunities to enter short until 55.25. And if we break that level, we'll look to enter short till 55.00. And again, it's like what I just showed you. We do have this failed breakout here where we don't even really quite reach it. We come back and we start trading below the 55.40. And then this is when you would use one of our indicators to actually take a trade towards the 55.25 and the 55.00. So let's say you took it right here, which is around 55.35, and it goes down to 55.25, 55.20. That's 5 to 10 points right there or more. Because again, you could just hold out and it depends on your strategy. Even if you took it here or here, you would still make money. And this is where the other indicators come to play. Let's say you took it here at 55.30 at this point right here. It goes down to 55.25, take your profits, boom. And it goes down a little bit more. And then you re-enter at 55.20 and it goes straight down to 55.00. So basically on the day, you could have made 20, 25 points, maybe more, just following the trading plan. Even on a day that's kind of confusing, that you don't really see how it could be following the trading plan, it's still following the trading plan. You just have to be able to use all of our other indicators to make sure you're taking the trade at the right moment. Let's go on to our another scenario. So again, another kind of consolidated day, but let's see what the trading plan has for us. So we have a pretty neutral bias. And if it's a bull market, let's see. If we have a failed breakout on the 55.60, which means if we don't break this second line here, if we don't break it, and it comes back and it stays above 55.65, which is this first line here, then we'll look for opportunities to enter long until 55.75, which is right around here, right around this middle area. If the price does not go down and it breaks 55.65 and it stays above it, which means the price doesn't even go down, just trades above it, then we'll look for longs towards 55.75, which is basically the same thing as the last one, just without the failed breakout. Now, if we break that level with good strength, which is important to note, then we'll look for opportunities to enter long until 55.90. I mentioned good strength because that's one of our indicators on the Quantico Cap. So if we don't break a level with good strength towards the target, then you know it's going to be kind of a failed breakout and it might stay consolidated or reverse. Now, if it's a bear market, let's see. If we have a failed breakout on 55.65 and we stay below 55.60, so if we hit this line and we trade below 55.60, which you can see has not happened, it didn't happen at all during the day, then we'll look for opportunities to short until 55.50. And if we break that level, we'll look to short until 55.35. Okay, so we can already tell that it's a bullish day and we're going to use the bull market. However, this is one of those scenarios where you can kind of do the trading plan over and over and over again. And by over and over and over again, I mean twice. So we can see here, we start off the day, failed breakout on the 55.60, trade above 565, and we go up to 575. Perfect. And then it happens again, failed breakout on the 560, trade above the 5565, and it goes all the way up to 580. And that's it. The trading plan literally told you, and it happened twice. It happened 2 times on the day what was going to happen. And it did happen. And you can see that it's so good that it really did follow it to a T. And again, you might be thinking, well, it said we should enter long until 5590. But remember, you need the DDF charts also. That's when you could tell if it's going towards the second or third target or if it's going to break or consolidate. That's when the other indicators come into play. But still, even without those indicators, the trading plan does its job. It doesn't break through the 560, trades above the 5565, goes all the way up to 580, does it again, doesn't break through, trades above the 565, goes all the way up to the 80. It happened twice in one day. That's how good the trading plan is. Now let's go into our last scenario. Let's go through today's trading plan. So you can see right here, I have the trading plan for today, and this is the actual market for today. Let's go through the trading plan. So if it's a bullish market, Let's see. If we're in a bullish market, as long as we hold above 52.50, above this price, we look for long positions. When we break and hold above 52.50, we can enter long towards 52.60. And if the movement continues, we can trade towards 52.70. If we break and hold above 52.80, we can continue towards 53.00. If the market starts the day going down and bounces on 52.40 or has a failed breakout on 52.35, we can understand this as a rejection on 52.40, making it a stronger support and start trading towards 52.50 and 52.60. Sounds good. Now let's see if it's a bearish market. We're in a bearish market as long as we break below 52.50, and below this price, we look for short positions. Right now, we're testing 52.50 at the time of this trading plan, and if we have a failed breakout of 53.45 and 52.50, we will possibly stay bearish. When we break the 52.40 on the bearish market, we can take the trade towards 52.25. If we break 52.25, we can trade towards 52.10. And if the movement continues, we can trade towards 51.80. If we go up, we might have a bounce on 52.70, 52.75, showing that the market will try to remain bearish. And if we break towards 52.40, we can start anticipating short trades until 52.25. You can use the volume momentum indicator on Quantico Cap to trigger the trades. That last part is important because, again, we use the volume momentum trigger, which is this trigger right here, to actually give us some entries. Let's go through the day. So you can see right here, we actually break the 52.50 here. And so what would you do? You would buy. Now, what happened today is that we actually did take a stop. We took a stop even though we followed the trading plan. And that's completely okay. It's completely fine to take some stops. That's going to be part of your everyday life as a trader. You will have stops. And if you are struggling with that or you need to understand a little bit more, we have a lot of other lessons in our course and our tutorials to actually help you with that. So here you can see that we actually took a stop. If you entered right here at 52.53, because that's the first moment that we really broke out, then you can see that you could take this stop here and it'd be a pretty ugly stop. It'd be around, I think that's around 7 to 8 points of a stop right here, which is a lot when you're talking about SPX. And then the price starts going down and you might be thinking to yourself, well, it might be a bear market. But take a look at this DDF heat map, which is one of the things that we use. You can see that it's been blue basically the entire day. So it's not exactly a bearish market. We're still in the bullish market. And listen, that last part of the trading plan on the bullish market, it says if the market starts going down and bounces on 52.40 or has a failed breakdown on 52.35, we can understand that as a rejection on 52.40, making it a strong support and starts trading towards 52.50 and 52.60. So even though you could have taken a stop here or maybe two stops here on the day because you followed the trading plan, you can understand this as a failed breakout of the 52.40 and start trading up. And you can see that right after you had this failed breakout, it went up the rest of the day. And that's what happens when you follow the trading plan. Even though you can take some stops, you will still be profitable if you follow the trading plan. And if you learn to read and understand it and use all of the other indicators, all of these other indicators on this screen to actually help you trade and confirm your trades. That's it for this lesson. If you want to see where to actually get the trading plan, either go to our community Discord that you have access to, or go to the dashboard here. So when you're on the dashboard, what you're going to want to do is click on this little icon here. And if you hover over it, it actually says trading plan. And when you click on it, you should get it right here. If you want or need the plan explained to you, please join the live room, which happens every single day at 9:15 a.m. to have it explained in depth, and you can actually see where the information is coming from, how to read it, and how to react when the market actually goes through its motions. And you can do that on the dashboard by going here and hovering over this little camera icon. And when you click it, it will take you to a Zoom link and simply enter the live room. Please watch all of our other tutorials for any help you may need on actually how reading each indicator goes and how to read each indicator with the trading plan. And remember, Please read the day trader disclaimer. Happy trading, and I will see you in the next lesson.